The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? A little bit of an extension, but we'll get into it here in a little bit, but we'll probably got about, 5/8 of what we're going to get in this move up, maybe a little bit more. Looking for the S&P cash to kind of stumble up from here to about 2720, 2740. Through expiration in the S&P cash. So we may have gotten a great deal of what we have in the indexes. My guess is we're going to see a lot of sector rotation. News breaking just after lunch about redemptions in a great many of the hedge funds, and that may have led to a lot of wholesale selling in the market over the last week or so. But it looks like some of these big hedge fund guys are probably not going to make it. A handful of them, anyway, have reported fairly large redemptions, and that just makes things worse for those guys. But maybe a combination of tax selling, and then it led to lower prices, which had more redemptions for these hedge funds. Kind of hard to tell right now, but that's it. Anyway, S&P's up 12 points at 2656. Dow's up 140. The Nasdaq's up 15.5 at 7,057.76. Yesterday, I could see very easily closing at 7,000. We closed above that. We got a little bit of follow through today. Now we're going to need some consolidation over the next few days. And as I said, I think we're just kind of stumble up here through expiration on the 20th of April. And the question is going to be, are you in the right stocks? For my subscribers, I'm in 5 equities and 1 ETF. And I continue to think that for a while, individual stocks are far going to outperform the market as a whole. We're probably in this lower trading range for a while. I'll be waiting pretty much for the last week of this month to see how the volume came in, if we've got enough energy to hold this market higher. If not, maybe it is a sell in May and go away. It hadn't happened for a long time. Maybe it's just coincidental and not something that will happen every May. But as far as I can tell, we made some extremely good lows by banging out a bottom, by hammering one out. We're up higher. Volume didn't come in yesterday. We'll talk about volume numbers also. But that's about it. Added a couple of positions, both in the short and long-term newsletters in the last couple of days. Happy with both. Again, you kind of had a big shot in short covering, and you're going to have some selling now. And then we're going to need to look at what happens probably next week. We've got JERBS numbers tomorrow morning at 8:30. Yeah, I'm a South Park fan. They took our JERBS. JERBS is the way they pronounce it. But jobs numbers in the morning. And I don't know what else you can say about that. Probably just in a, probably people exiting stage left before those jobs numbers in the morning. But that's about it. I suspect they'll be in line. Not a lot of surprises, and we will continue up. But the question is at how fast. And my guess is we're still going to see a lot of people shorting every pop higher. One of the things that's the toughest thing to learn about being short is that you want to be short about 25% of the time, even in a bear market. 75% of the time, the market continues to go higher, maybe not much higher, and then you get the huge move down. But being a bear is not just sitting on a position until everything dies. It's, occasionally you get those crashing markets, but for the most part, if the market's moving down, especially over a period of years, what you're going to have is a lot of sideways to slightly higher action, and then the big move down. So my guess is, even if I was a bear here today, I would say that for the next few weeks, it's going to be exceedingly hard to get a lot of people. We had cash come in yesterday from fund buyers. They may have stayed out way late because they knew a lot of these folks in the community of high risk assets were having to sell. So we don't know about that, but that's it. Let's get into a little history. Let's get into some market movements, and we'll have some fun here on the rest of the day.
Then it's all just a little bit of history repeating.
On this day in 1995, Dan Farmer and Vist Venema released the Internet Security Administrator tool for analyzing networks, otherwise known by its acronym of SATAN. SATAN is used by network scanners for investigating the vulnerability of remote systems. Designed for use by network administrators, the program was, of course, used by those that were not so well-meaning. They generated controversy and, of course, got Dan Farmer fired at the company he was working at. I remember this pretty interestingly. Everybody thought it was a great idea until it came out, and then everybody got a little negative, and he got the axe. But the good thing was he went into a job paying twice as much in computer security, so it ended up being a silver lining on a gold cloud for Dan Farmer. And not so familiar with Vist Venema. I don't even know how it's pronounced, but Dan Farmer was the face of it in 1995. These things are now called crime kits in computer security. And I've taken the courses how to use them for my own cyber security for my machine. So I know basically how to run these and check whether or not things are open or closed on ports. In fact, Microsoft has one itself that'll run on your machine and check all the things that you can flip on or off for security. So these things are not new, but depending on who makes them, they are looked at fairly well or not. The main one that everybody uses today is called Kali, K-A-L-I. You can basically download a DVD and put it in your machine and test out your own machine. Pretty good stuff, but it takes a little while to learn. Not easy, as most stuff is. It takes a little bit of time. On this day in 1995, the first test kit for internet security comes out the door. More importantly, probably the birth of what is known as the crime kit also at the same time. We'll be back after this. We'll get into a lot of questions already stacking up tonight.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I'm wondering what's going on here because I got 5 emails, maybe 6, about going into Micron. Never a good idea when everybody emails me something. I always want to scratch my head and ask why. Maybe somebody in the den knows why everybody is asking about Micron here. Micron is down today after a nice bounce yesterday. As I said yesterday, I think someone was calling in and asking about this also, maybe on Monday or Tuesday, can't remember now. As I said, these things have had some tremendous runs. And yes, can you buy them here? And will they probably do okay? The answer is yes. But my guess is we're going to have a lot of sector rotation. And going back to the people that did well last year is probably not the best thing. Do I think these things are going lower? No. Or appreciably lower? No. Do I think that they are going to perform like they did in the last year or so? The answer is also no. My guess is that we're going to see some of these stocks that did very well may do well come fall. But they're probably going to need some consolidation. They've been running fairly hard. I bought Micron, I think, in the Tech Insider at $9.65 or something, and made some good money on it, sold it way too early. But after it's run all this way up is not where I'm always thinking about buying stuff. Now, it's not that you can't make money. It's just you can't make the kind of money you could when I was looking at this thing at $9.65. So what's the question out here is, are you looking for a little money that's safe? Or are you looking for a lot of money? And the question is that the risk reward at highs, not all that exciting. I think Micron could be a $100 stock maybe in a few years. Is it going to take 6 months or 9 months off? I think it could. Now, one of the reasons it's kind of down today is that they announced they're going to build a giant new factory that's very expensive for some older technology memory. My belief is that's going to be for Apple. And they're trying to get Apple wants to stick it to Samsung because they all think that they're charging Apple way too much, whether it's Qualcomm or Samsung's screen or Samsung's memory. Apple's just sure that everybody is out after their money, and that's it. Everybody are horrible people except Apple. And that's one way of running your business. I don't think it's a good way of running your business. So in the meantime, Apple's trying to build all their own components down there in Texas. So yeah, I can kind of understand why a lot of people would be a little sour on Micron, throwing a lot of money into memory technology, which is kind of old. And here's what you want to think about. Old equals low margins. There isn't a lot of old stuff that equals high margins and high volumes. And that's why everybody's kind of scratching their head going, hey, okay, we got all this new memory. That stuff's going to make lots of money. And you're throwing lots of money at this old technology with low margins. You're probably going to sell it to Apple, and they're going to beat you up for a low price. So what's really good about this for Micron? Not a whole lot. I also don't like them looking in the rearview mirror when they have some fairly good technology that's going to do very well in the next few years. Maybe this is a bit of hedging their bets. I don't know, but from my belief, the slowest thing in your computer or around your computer is the memory. And with the new technology they have for Crosspoint, man, that's where I would want to be putting my money, not in old stuff. And that's probably why you're seeing the pullback in this thing. Could you get it down to $45? I think you could. You'd really have to see the market say something like that. Again, maybe you get another day down on Micron here. I'm not a big fan I wouldn't be short the thing, that's for sure. But, could it just go like from 45 to 55 till September? Or maybe even a little higher, maybe as much as 57? I think it could. And that's why I'm not a big fan of probably buying Micron here. I'd like this thing to consolidate for a while, bore all the fast money people out, and then that would be the time to get into it. A lot of stocks with amazing patterns out here, and everybody's going back to the stocks that they know that don't have as good a patterns. So I'm just saying maybe there's an old saying on the street, and that's change the name. If you worked on Wall Street, people would say change the name. What does that mean? It means it's been around for a while. Everybody looks at it all the time. The big money is probably going to be somewhere else, and I would just say that the big money probably not going to be in Micron for the next, well, let's say till September. I think trading range is kind of the best idea you can get. There are a lot of other stocks, we've been going through them for the last week, that have had tremendous bounces in the last day because they came off massively oversold conditions and have high volume highs that you can go out and look for. So I'm just not saying these are bad trades, just saying maybe it's time to look elsewhere, maybe a little bit. I do hear a lot of very bad reporting on Intel, and of course that started with the issues that they talked about last time. This time, it's now the story that, guess what? Apple just isn't going to use their chips anymore. Well, pretty stupid people saying that, because guess what? Apple is a fly on an elephant when it comes to the money that Intel makes. Not only that, Apple asked for special pricing to put it in their Macs. So let's say that they don't get any more business from either Intel or, from Apple for either the phone business or the laptops and the desktops. What percentage of machines made today are either an Apple laptop or an Apple desktop machine? Anybody have any idea? Bueller? Well, the numbers are a little hard to find because Intel or Apple won't let Intel say. But it's about 1% of Intel's total profit. It's literally nothing. 90% of Intel's money that it makes is for servers and server farms. Only about 9% has anything to do with, and I may even say 6% has to do anything with desktop processors. They make, in fact, I was helping a guy build a $100,000 PC, if you can believe that. It's actually a server, and it was a 128 core server, and the chips in these things were I can't remember what he said, $10,000 or $20,000 per chip. Anyway, I was standing around while my friend was building this PC server. You got to sell like 1,000 regular consumer chips to make the same money they make off one chip that goes in these big servers. No one really has the idea of proportion and profit margin, but Intel is the only other company besides Apple that has been able to carry 60% margins for years at ad nauseum. So Apple is not a big deal for Intel. We'll talk more about this when we come back. You can give me a call at 877-927-6648.
Exit! Stage right.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So we're looking at Intel. Again, you really have to understand the business model of these companies. I understand that, you know, if you've got to put on news on CNBC for 9 hours a day or 10 hours a day, whatever it is, that they have. Probably even longer, isn't it? 12 hours a day. You got to get a lot of people, and they all have an axe to grind. This is not where a lot of people come to give them the wisdom of their brains for no reason. They're normally talking their book, and either they're short the thing and they want it to go lower, or maybe they want to buy more, so they want to get the price down. But there's just not that much out here in Intel. But I'm going to say the same thing about Intel and a lot of these other semis, and that is that they really need some level of consolidation, and that only happens through time. So I'm not going to be the guy out here that says that they're going to go down. I'm just going to say maybe there's faster horses out here. These things have had some enormous runs, and from Intel to Microsoft, these things have broken out of long-term levels. They've gone up. They've got billions of shares. And you're going to find some people. I heard Steve take a phone call from somebody. These things broke out at fairly decent levels. They've been able to hold these things for a long time through up and downs in the market that seemed unholdable. And they're fine. If you want to hold them for a long time, I think Intel is a good bet. But we're probably, again, looking back into September, I would think, before you see major changes. Now, Intel and Micron both have great technology that's really just starting to see the light of day right now. And it's kind of like somebody inventing a brand new engine that has 1,000 horsepower. It's great, but if you stuck it back in your car, you'd blow out the transmission, the rear end. You'd have to get better tires and wheels. And that's going to take a little while for all this to circulate. But the slowest part of your PC is always memory. And the fastest way to accelerate it, even though they may not make chips that are twice as fast next year, being able to accelerate that memory is a huge issue. And why I think MU's down. I think people are looking at them thinking that they're looking at the business in the rear view. Intel, not much going on with it today. But, could it be in a range between 45 and 55 for a while? I think it could. We really need something. The only thing I'm thinking right now is that we have a very good chance of seeing somewhere between 27.20 and 27.50 by the end of the month on the S&P cash, and I think that's going to be what we're talking about. You can always email me at path@tfnn.com, but I would also worry that I'm getting all these phone calls about and emails and seeing all this chatter all at the same time about Micron. If everybody's interested in it, I generally am not. Buy them while they're crying, sell them while they're yelling, and I don't see too many people telling me that it's the end of Micron. That'd be where I'd probably be more interested in it. And maybe you get one day where everybody says it's the end. But right now, not enough people, too many people interested. Every time everybody wants to buy gold, it always makes me feel a little worried. I want it when everybody says that gold is going to be worthless. And maybe that's just part of my counterculture trading. What else do we have? Yeah. Okay. Let's look at some charts out here and how these have been doing. Got plenty of time for me. Oh, I wanted to get to this email. I got actually a couple of them, but I'll get into this one in this segment, get some in the other second. Motorola Solutions. This is the cell phone and all the other stuff of Motorola used to have. I think, which one? Is that the right one I'm thinking of? Anyway, this one's hanging out at highs, kind of a closet one. I think they were making Google's Pixel phone, if I'm not mistaken. Let's make sure that I'm right, because there's two of these Motorola things floating around. Provides mission-critical communications infrastructure, devices, accessory software, and services Products and services, portfolio of infrastructure devices for software, government, public safety, and first responder agencies. Commercial, industrial. Now, this one sounds like the one that makes all the radio systems. Integration systems, including implementation. More like, military, all that kind of stuff. Enhanced, enhanced IDN services, IDEN services, and that's it. The company was formerly known as Motorola Inc. and changed its name to Motorola Solutions January 2011. Okay, it was founded in 1928. Does anybody know why Motorola was such a big deal? That they were the fangs. Motorola was the fang of 1920s. I wonder if anybody knows. They were the biggest thing. They were the biggest, one of the two biggest stocks in the 1920 business. Nope. They made a adapter so you could plug radios into the wall. They made transformers, made power supplies. That was their big claim to fame and why they became monstrous. RCA was making lots of radios, and you had to go charge a battery up and put it back in the big massive thing. This way you could just plug it right into the wall, and it ran. It seemed almost like magic in the 1920s. Nothing but a power supply company. Think about that. Okay, so we've got that. We got one more that someone wanted to look at. NTNX. Okay, Nutanix. Let's take a quick look at this one too. Well, we got it up here. Together with subsidiaries, provides an enterprise cloud operating system in North America, Europe. Its cloud operating system converges traditional silos of servers, visualization, storage, and network into one integrated solution, provides cloud services to a single software fabric. It's got some interesting applications. I still don't know if this thing has a long road to go because basically Linux, either Red Hat or some of the other vendors or Linux, will just probably copy what they do. So I don't know if there's that much in this one fundamentally. Certainly this thing has gone up to the high. I would watch for the possibility. You got a doji out here today. I would watch for lower prices tomorrow and then a possible test of this March 22nd high at 55.25 at $8.74 on lighter volume. If you get that, maybe you've got some kind of high in on this one. Energy's not that great off lows just yet, but tomorrow's going to be the proof of the pudding. Either it's going to go up and test 55.25 or probably down to 45.30.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And I had a quick question about what I was looking for in the SMHs. And basically, we were bouncing off this confluence range that went from 101.78 to 102.91 over the last few days. We bounced today and it kind of pulled back. My guess is that you're probably going to try to see this thing through the next week, get up to 107.03. That's why I'm not looking for a whole lot out of either Micron or some of these other ones. The SMHs, I think could do a 50% retracement or maybe a 782 retracement, but then I think you're going to get back into that whole consolidation thing. And, 3% higher, 4% higher, just not enough for me to get too excited. Maybe that changes, but right now I'm just looking for 50% bounces off the low. And, that doesn't leave that much meat on the bone for any of these trades, and why I think that your best thing to do would be look for where the money's going in the sector rotation. And I'm pretty sure we're going to have some of that. What else? Oh, I wanted to, what did I have over here? Did I have this? Hang on a second. I'm trying to pull something up. Okay. Yeah, it's going to show something here, but maybe I'll get it in the next segment. Okay, so we'll start looking at some other stuff and how they've been doing. We talked about many stocks that seemed rather interesting over the last few days. HP Enterprises had this in the newsletter this morning, not as a buy, but as a chart pattern. I already pretty much am loaded up with everything I want for this next cycle up. And seeing some very good action in the equities we did buy today. Getting a little retrace in the ETF that we got. So we'll see. Here's Hewlett-Packard Enterprises, HPE, talking about another old-timey company. Gapped up on the 23rd of February, did so on 45 million shares. Just 13 million shares yesterday. No high volume there. What do we have now? A little pop-up here. So this one would be kind of interesting for a retest of the 1948, much more likely than I suspect some of the other bigger names, but we'll find out. Maybe I'm right, maybe I'm wrong. Ericsson, another electronics company, mostly for Europe. Nice pattern on this one. Now, this one's a little more bouncy because I think it is an ADR. but this gapped up on the 16th of November with 2.6 million shares. Now, you kind of came down with heavy volume on 10 million shares of February 6. You got back in it with just a little under 4 million shares yesterday. But this $6.20 area looking like support. GPRE, which is Great Plains Renewable Energy. Some of these things look like they could be bottoming out. Couple of 1.3, 1.4 million share lows in the 1560, 1580 range in this one, GPRE. Just 760,000 shares on April 2nd. Yesterday we had 422,000 shares. Today, 224,000 shares. Not an instant bounce on these, but interesting looking charts. So like I said, start looking at some of these. Now, as a surprise, you wouldn't think that retail clothing for the teenager would be the hottest ticket, but of the stocks up here at big time highs, American Eagle Outfitters is one. Okay, March 7th, $20.83 with 7.66 million shares, 4.6 million shares today. Yesterday, just 4.4 million shares. So you're starting to see these retail stocks that did so well over the last week, 2 weeks, as everything else is going to hell in a handbasket, at least testing the highs up here. So you may be wanting to keep an eye on that. Another one in that same vein is Urban Outfitters. Now, this one's actually up to a longer-term high. Let's get it here. It's back to its gap, if you can believe this. Urban Outfitters up at 38.64, which goes back to this gap down on November 23rd of 2016. So this is kind of what I'm talking about. A lot of these stocks that no one thought about, a lot of people thought were dead, had some fairly decent lows and have done nothing but run. Why everybody continues to look at the same stocks. There are going to be other stocks in the same vein. I wouldn't be buying it up here. But what I'm saying is there are other stocks like that are at these lows, and that's it. Okay. Cimarex Energy. This one's actually a little higher volume. This one is these energy stocks are tough. The XES, which is the S&P Oil, Gas, and Equipment stock, never got down and actually tested its low. It's back around here, around the October lows, though. Had a little bit of a bounce out of this one. What else did I want to look at here? Is this MOD? Modine Manufacturing, MOD, on this one, testing a 520,000 share low from December 15th on 358,000 shares yesterday. A little bounce out of this one. Energy off the high, not all that exciting, but there's a $5 move in that. So what is that? 20%? That one kind of looks a little. Marvel, I think we had a couple of emails about this one. This one, as far as technology, one of the better looking charts out here. This thing gapped up on a fairly decent volume of 20 million shares back on November 6th and only tested it with 7 million shares yesterday. Reversed right out of it and popped back up. Energy was a little bit much for me off the March 9th highs, but that's kind of like everything. We got a lot of selling. It's no secret. It's just that the volume all dried up down here at the bottom, and now we're getting these bounces. But these are kind of the stocks that I'm looking at. They had much clearer signals and looked much better. LFIN. I don't know what FLIN is. Another one of these dope stocks, FLIN. Is that it? FLFIN. What is this? Longfin. Don't know anything about it. Huge volume today, which is interesting. See if we can't go back to a longer time frame on this one. So it must be some new IPO, huh? LFIN. I didn't see this one. Independent finance and technology company in the United States. The company specializes in structured trade finance solution, physical commodities finance solutions for finance houses and trading platforms. Well, it certainly doesn't look good. Is this back to its IPO price? I have to find more out about this one. I don't see much in it, though, and there certainly isn't a lot for the data in this. I would have to stay away from it for a while. I would want to see this one trade a lot longer before I start trying to get into this. We'll be back in a minute.
Exit. Stage right.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Yeah, Elfin, I got a couple of people that emailed me and said that some kind of scam stock. I have no idea about it. But yeah, for an IPO that doesn't have a lot going on here, that this thing just came out, I think you'd want to see this trade for a lot longer before you started getting into these things. Yeah, just don't see much. Anyway, look at a couple of stocks before the end of the day. PIRS is on my list to look at today. This is Paris Pharmaceuticals. Interesting chart on this one. Certainly, you've come down with 2 million shares on March 9th, just 1.5 million shares with a spike down on March 16th. You got into it with just 567,000 shares yesterday. So energies decreased off the March 22nd high compared to the leg up starting on March 16th. This is the kind of pattern that I'm looking at for buying lows and all the stuff that I was kind of digging into for the last week. Did it come down on less energy? Did it test the previous low on lighter energy or lighter volume? Did it do so on 50% lighter volume? Well, this one did on 33% of the volume or 66% lighter volume. These are the kind of signals that will make you money and make trades a lot better to handle and to sit on when you know that the sellers have kind of given up. You've seen previous times when they've been interested in selling. Times like now, not so much. Anyway, pretty interesting stuff. I'm expecting probably a little bit of sideways action for a couple of days. We start getting into options expiration next Wednesday. We're going to slowly probably move up, I suspect. Be a lot more choppy action. But I do think that the direction is going to be, at least for 2 or 3 weeks, higher. So if you got a good position where something tested lows on lighter volume, time to sit on your hands. In the meantime, sell when you can, not when you have to. See you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.